thanks so much for stopping by and giving us your view on a whole host of stocks early this morning. Wishing you a good Friday and a pleasant weekend ahead as well. Well, we're getting initial rates coming in on the Nifty, and I think for starters, unexpected lines, we're down more than 100 points. Let's see how deep a gash we start off with, because that's going to be quite crucial. My guess is that, in fact, if you can hold out onto that 17,450, the bulls will feel that they're well in the game. So let's see how that works out. Well, let's focus on a space, though, that's been buzzing. A lot of upgrades have been coming in, whether it was from Kotak earlier this week or Jefferies as well, the metal space. Rakesh Arora, founder at goindiastocks.com, joins us on the show. Hi, Rakesh. Good morning. Rakesh, how are you feeling about the metals pack? Suddenly, in the last few days, a lot of upgrades are coming about. Are you feeling good about the metal index from here on? And what's the preference within it? Ferrous or non-ferrous?
So, Nigel, the market is pretty balanced at the moment. Obviously, 2023 has started on a better footing than what was second half in 2022. One of the big factors, which was kind of taken out is reopening of China. China is 50% of global commodity demand. So if China reopens, that's a positive sign. Unfortunately, the reopening is not coming with the same kind of demand what people initially expected, because Chinese government was trying to, stabilize the economy during COVID period, and they had pumped prime on infrastructure build. So they're already at a very high level, and, I don't think it can go much higher from where they were in last year. Secondly, they also came out with schemes on auto sector to, support the demand. So that also is into the base effect. So the only thing which is yet not working is the housing sector. And I really don't see any, signs of it turning around immediately. So while, China reopening has taken out one of the issues, but still it's not really putting its weight behind a commodity rally. Then the rest of the world, largely developing world, is, probably going through a slowdown given the interest rate hikes. And there's no visibility either on that, whether we have peaked out or not on interest rates. So overall, I would say that situation is kind of balanced, and the stocks are going nowhere. They would remain in a range bound. There has been mean reversion, but there's no big rally in the making.
Okay, so stocks are going nowhere. It's better than the stocks falling, right? Because that's what's been happening with some of the names. I wanted your thoughts, Rakesh, on what's happening with Vedanta, because despite the company reassuring investors that they are able to make all their, payments, the stock has been under pressure for a while now. How have you read into that story, and what's the outlook?
So I think Vedanta stock is kind of supported because of dividend yield. The more the pressure on the holding company and promoters' balance sheet, more would with the dividend coming out. So I think, last year they gave almost 70 rupee dividend. That's a huge dividend yield. So I don't think Vedanta stock is going to go down in a hurry. As we were discussing, commodity prices have stabilized and there's a mean reversion from 2022. So things are slightly better. So I won't really worry too much as a Vedanta shareholder. But as a promoter, meaning I have no clue how their finances are going and whether they will be able to refinance their loans or not.
Well, they've been telling Nigel that all is well, Rakesh. He had a great conversation with the man himself. But, on a separate note, I want some more thoughts on steel, because we were discussing this, Nigel and I, a couple of weeks back. This whole anticipation that we'll start seeing price hikes now here in India, a bit of a catch-up. But given the overhang, the negative global commentary, and this overall talk of recession, I don't know if that starts impacting this expectation of significant price hikes here.
See, I don't think there will be significant price hikes because demand scenario globally is not supportive for steel prices to go up materially. Largely, the increases have been driven by cost pressures because iron ore has moved from $80 to $130. And coking coal, which also kind of has improved by $60, $70. So there has been cost pressures, and that is what is getting reflected in steel prices. There would be margin expansion for Indian steel companies over Q3, but it will be like 1,500 to 2,000 rupees per ton. And so I'm not really expecting a big rally in steel prices. It's just a pass on of costs here and there.
All right, Rakesh, what about the NMDC steel plant? people are building in some blue sky scenarios as well, on that company. But the plant is not yet commissioned. They're sitting on a debt of close to around 5,000 crores by the time they get it commissioned. And it's up for grabs. Strategic fit to who? And added on this 37, 38 rupees, what's your view on the stock?
So, Nigel, government is trying to sweeten the deal. They have been able to tie up INO for 10 years from NMDC, and they might give further concessions to make it more attractive. The location of the plant is not that great, but given that most of the steel companies' balance sheet are repaired and stronger, there could be a little bit of bidding intensity that comes in. So I would say that people will get surprised a little bit on the upside on valuations when the bidding finally happens.
Okay. All right, Rakesh, we'll let you go on that note. We have an entire market to trade as well. So we will continue this discussion on another day. Thanks a lot for joining in. That is the word on the metal space. By the way, the market is now looking like it's going to be a pretty ugly picture this morning. Mitesh is joining us yet again. Mitesh, what's the big call at 9:10? Looks like it's going to be a big gap